I'm Matt Bichard with NAREITsREIT.com. Joining me for a look at the property markets is NAREIT Senior Vice President of Research and Industry Information, Brad Case. Brad, thank you so much for joining us.
Sure thing, Matt.
Can you start by telling us a little bit about what you're seeing with property values?
Property values nationwide, all property types together, seem to have increased by, we estimate, 0.44% during the month of February. We measure that using the FTSE NAREIT PureProperty Index Series.
Now, if property values are going up, but we're seeing REIT share prices go down, what's the reason for that disconnect?
Yeah, we saw a marginal increase in property values, even though we saw a marginal decline in total returns for REITs. And the reason for that is that REITs are not just investments in the property. REITs use a capital structure. They borrow money to invest in properties. They have to make payments on that money. And what we saw during February was the increase in property values was really not enough to account for the payments that they have to make on their debt. That's not a normal situation. In a normal situation, property values go up more strongly, and their use of leverage adds to their returns. But in some of course, if property values go down, then that doesn't cover the cost of the leverage. And in this case, property values went up but not by quite enough. And so therefore, even though you saw an increase in property values, you still saw a very slight decline in total returns.
What about regional variations in prices?
Yeah, one of the great things about the PureProperty Index Series is it gives us a way to isolate the changes in property values for different parts of the market. So, for example, during the month of February, the strongest performance seemed to be in the south region of the country, which was up by about 75 basis points on the month. The Midwest and West regions also did well during the month of February. The East region, we saw property values decline very slightly. So nationally, we saw a slight increase in property values, but that was more in the South, the West, and the Midwest than in the East.
And what does the pure property market say about smaller market segments?
Yeah, sure. One of the great things about the PureProperty Index Series is that it enables us to look at the property markets by property type as well as by region. And as an example of that, during February, we saw stronger performance for apartment properties located in the Midwest region of the country, and weaker performance for apartment properties located in the East region of the country. And basically, the way the PureProperty Index Series works is we look at the individual property holdings of the REITs, and we relate that to their stock price movement and their total returns. So what that tells us is that, generally speaking, REITs that owned apartments that were located in the Midwest region did better during February than REITs that owned apartment properties that were located in the East region. And so we take those relative stock price movements and we use that to infer what must have happened to the property values in different segments of the market.
Brad, thank you so much for joining us.
It's a pleasure.
For more on this and other REIT news and analysis, be sure to visit REIT.com.